I have with me now Sushil Kedia. Mr. Kedia, how significant is this correction today? How significant? Because technically it takes out some levels, but how do you see it?
See, it has definitely taken out a certain critical level, the criticality being that from the area of 85, 60 odd on the way up, market had taken multiple supports. So that having been broken once, the sentiment of technically driven traders is going to be shattered.
Right.
Now, that getting shattered does not mean that right away will continue to nosedive further. That's on another time frame. Since those supports were taken on a chart of a time frame of a few months and on daily charts. So over a time frame of, say, the next 1 month, today's break makes the thesis of an immediately ongoing bull market totally suspect. At the same time, for very short-term traders, we should focus on the short-term patterns on the chart and wherein the momentum is severely oversold. So I would put my postulate in two parts. If you are panicking right now, having been stuck up in some bad long trades, or you are trying to join the flow and short here immediately, then you are already too late.
Right.
And you have to be patient here and wait for a rebound to come. But once the rebound materializes, let me try and cap how far up it can go. You know, what is the outer theoretical limit upwards? If you will be drawing a simple pattern, you know, connecting all the lows on the daily chart from the budget day's low till this day,
Right.
there is a converging set of two trend lines that are connecting the tops and bottoms, and it in one sense can be a very foreboding and a very potent pattern also, yet to be confirmed for a massive downside. But say the trend line that was supporting the lows over the last 6 months period, that becomes your maximum upside line. So I would say it's not meaningful to predict whether we will get a chance to short again at 88.50. But that's the kind of risk you have to bear in mind. And you're quite far from there, almost 300 points. A more realistic number could be 87.50. So we will decide when a fresh entry for new shorts is made available. But as of now, I don't want to join the fray of adding new shorts here. If you have shorts, taking a lot of the profits off the table again makes sense today. Because if any windfall that comes to you suddenly, unless you lock it, you know, it will evaporate again. So maybe at least taking half the shorts out today and closing the profits and taking them home appeals to my way of trading. And if there is a rebound coming in, I'm definitely positioning myself to be shorting this market and trading on the downside for several weeks and fortnights to come. Clearly, the call for, you know, being a permanent bull is totally suspended.
Okay, as you said, that there would probably be some shorts in the market already. And are we seeing support coming in around that 85.50 level because shorts have started squaring off positions?
I would not, you know, get into theorizing various reasons for which what the move may happen. I would rather be going purely with a statistical way of thinking that after so much fall, how further is the prospect of any deeper fall? See, the speed with which we have fallen today, we have to keep that in context. Last 3-4 days, we were running very small ranges in sideways markets. So vis-a-vis the speed of fall of today, you know, a 30, 40 point, 50 point move further down, you can't completely rule it out. But, you know, that would be crumbs in comparison to how badly this market can snap back up. You know, tomorrow if you find it 100 points higher, or over the next 2 days you find it 200 points higher. So in the face of such an event, a short seller should close out a substantial part of the short and take profits home so that he has elbow room on a rebound to short. Those looking to short are advised to wait and don't join the panic behavior of the market right now. And clearly, this is definitely not a market to be a long trader.
So let's
Even
say,
if there's 200-point rebound possible, I don't want to join and be on the fragile side of the trade.
so effectively, you're saying that any move up to 87.50 is essentially what is called a dead cat bounce. It's not as if...
I don't want to label those. I like to keep my mind simple. Whether it's a dead cat or a live cat bouncing, that much of a bounce can come.
That can come. But you're not going to... At what level would you take more long positions?
No, I won't take long positions in this market now.
Not take them.
This market has much more downside to come. Subject to reconfirmation as to after the rally that comes from here over the next few days, if it comes and how much it comes. One will decide for, fresh entry points for expanding the shorts. Today is a day short-term trading has to be contrarian in nature. You can't be part of the herd. You have to play against the herd. Either if you are a trend follower, strictly speaking, and you go with the news flow, then you should not be a short-term trader.
So would you say that today, I'm just reconfirming that this is what you're saying, that as of today, the uptrend that we had seen in the markets definitely stands reversed?
No, the uptrend has been broken. That is the longer-term view of the next several months. For the next week or so, maybe a few days, if a rebound comes, that will be useful for shorting. I am not going to recommend anybody to buy for this rebound. If somebody is already holding shorts, I had an interaction with you on the day there was this surgical strike panic.
Right.
And when the advice was close your shorts here and wait for a rebound to come, which can go back to the same levels as where, the surgical strike panic came. We went roughly there and have come up from there. I won't be able to this time place my finger and say whether it's going up to 88.50 or not. The pattern is not like that. But perhaps at 87.50 or 88 or wherever it comes, I will again short. And in the same way, this is not the moment to add to your shorts further. Even if the market were to decline 50, 70 points further, it may turn out to be crumbs in comparison to the sharp snap upwards that can come over the next few days. It may or may not come. But again, trading is not a one-day business. You keep coming back to the desk. If you are a winner next day, if you are a loser, you'll come back to the desk again. So you have to keep playing the game in the same way every day. And after a substantial fall, you don't join the trend.
I know that
in a falling market, you have to use the rallies to sell. So this is not a market to, buy the dip. This is a market. If there is a rebound, it will be good for selling further. And today is the day to take profits for short sellers.
I know that for a trader, technical trader, one doesn't catch a falling knife. But what, according to you, is a space where you think there is a significant support for the Nifty, where even if it corrects, it will consolidate for a while?
So it's not about a technical trader or a non-technical trader. Whether you catch a falling knife or you play with the trend is your personal style. With or without technical analysis, you can do both. And next point, I don't think I am intelligent enough to answer every possible question. But in the current market, I will like to sum it up. In the current market, I don't want to do long trades.
Okay.
If anybody has short trades, I advise them to take some profits today. If not half of your profits, at least take quarter of them. Even if the market were to continue to fall, you have to lock your profits. If a rebound comes, then again short. I like to keep it as simple as that. Actionable, simple points.
All right. Thank you so much, Mr. Kedia.